Welcome back to Getting Real, the show that's all about getting real with people who have actually lived the founder journey. Today's guest is a perfect example of that. Steve Negri is a four-time founder, a Fintech veteran, and the co-founder of Next Moves, a company redefining how commercial credit and debit card programs are created, issued, and managed. He's exited a company to Jack Henry, built across platforms, banking, card issuance, and financial technology for over 2 decades. And today he's helping community banks compete directly with the top 10 banks in the country. Beyond the resume, Steve is a straight shooter. He's transparent, he's honest, willing to talk about the real founder journey, the pivots, the pressure, the evolution, and the cost. So today is just a conversation about what you've built, how you've built it, and the future where payments is heading. If at any point I hear anything about AI, I'll flag it because we're going to be talking about AI today. But just for now, let's jump in. I've got my first question here is, tell me about your story and where were you before Next Moves?
So before Next Moves, I was actually at a company called Move. So, and just a two-time founder. I was at two startups before. I just wasn't the founder. And then,
Okay.
but I was at a company called Move Financial, MOOV, which was an incredible experience. We were basically a company that was backed by Bain Capital, Andreessen Horowitz, Commerce Ventures, Visa, and we basically were building a low-lying infrastructure for acquiring and issuing an all things payments, RTP, FedNow, and all things payment rails. What I like to tell people is if you were going to build Fiserv from the ground up, that's what Move Financial would be, with modern APIs, one platform, one infrastructure.
So tell me, who were you before the founder identity took over?
I was always a guy that was I was in corporate and always, getting tired of Friday meetings and having meetings to schedule meetings, and but I was always on the sales side, so I was always in business development, and I always wanted to build solutions for people and find a way to do something different that other salespeople weren't doing, or find a way to make a deal work that could be there. And I always liked working on the larger deals, or going after something that I loved when a client said, we can't ever make this happen, or we can't seem to make this work, or we can't get this done. I always liked taking on those challenges, and little did I know I was just building my way into, basically what entrepreneurship is going after, what doesn't exist out there, and, you trying to find an answer and a fit to what the market really wants and wants to do.
Entrepreneur turned entrepreneur. Tell me about some of your early influences or influencers.
Yeah, I was very fortunate. As a young kid, I played a lot of sports. I was pretty athletic, and had some really good mentors as coaches, had some, really people along my journey. And then I was real fortunate when I graduated college, I got to go work for two guys who bought a business, who were 25-year vets of IBM. They retired under the golden parachute back in those days. And they bought this golf car business, and they I actually won the interview because they asked me what I like to do. And I was like, I don't know. I like to play horses every once in a while. And, I love like looking through the telly and, figuring out how the race is going to go and different things like that. And he's like, well, you'd be perfect for sales. That's really what sales is trying to read the tea leaves and figure out how to make an analysis and how to build a solution for what you want to do. And working for them was really great because they came from the IBM mentality. And if you know much about IBM, it was, you need to train some more. And then after that, train again. And so they sent me to, coming fresh out of college, like 22, 23 years old. I went to every sales training. Sandler, I still argue, is one of the best sales trainings that I ever went to. Carnegie, I went to, multiple different other, entities they're not really around now. That was 30 years ago. But they sent me to all these sales, plus being with them every day and working with them, and having somebody who's 30 years older than you when you come out of college, being able to instill what you need to look for, how you need to go after that, and really truly take the time to train you was invaluable in my career, I feel. So I was able to just really be ahead of the game, be ahead of all my peers that were my age, the way I was thinking at things, the way I was looking, the way I was evaluating. and created really early sales success in my career. I was came out of the gate really doing well, so I was very fortunate.
Yeah, it was similar to myself where it's sort of embracing sales early as a way to help people. And then when you get exposure to all these different methods, you can really approach it from a completely different lens than, somebody that's coming into it maybe hesitantly. Tell me about your first
And not
exposure
and
to.
not be I always hated this stereotype that you had to be, like, scummy, or you had to
Right.
be, you had to lie to people, or you had to what you wanted, you need to build relationship and trust with people, and, we just kinda follow the principles of, one of the things that was really taught to me coming early was, sell yourself, let people believe in who you are and the words that you say, sell your company. And then what the third thing is the product or the solution, whatever you're bringing to the table, then they're willing to listen and learn. If you don't have the first two down, it doesn't matter what you tell them. Then you're just, at that point, you're just selling on price, but you're not selling on quality. And I always sold the better products in the marketplace. So I needed people to trust me and understand what I was telling them was the best thing for them, because I knew we were never going to win a deal on price.
Yeah, I love that. I guess as it relates to your journey, what was your first exposure to financial technology?
My first exposure to, real financial technology was I worked for a company called Walters Core, and Walters Core they had a finance and accounting product that, I was helping to sell. And that was really rudimentary. I mean, this is a long time ago. So it was, people today wouldn't even call it technology. They'd probably call it, it's the technology of a calculator at this point. But it was advanced for that time. And so that was like my first entree into really seeing how technology can help scale and efficiency and processes and stuff along those lines. And so I got a taste of it, being able to, be an early guy selling digital services. There wasn't a lot of people out there selling digital services at the time, or, so that was a great exposure that I got. And then I got to go global with that. So that was kind of cool. It was my first entree into selling into, different continents and dealing with different countries, and the sales techniques and different things that you do. Culturally, it's so different selling in the States versus, overseas. So, which I quite enjoy, and actually came back around and when I was at at Next Move. So it's interesting to learn the different cultural avenues of business.
When along the way did you realize that you weren't meant for the traditional path and that you were going to go sort of hang a shingle and get into things on your own?
I worked for this wonderful lady when I was at Walters Core, who took me under her wing, and I was really fortunate to have really great salespeople above me that really took a liking to me and really helped me out. And I used to, I'd get mad at the processes, and having to, it was like a lot of times, when you're in a corporate, right? It's like you have to take care of the corporation more than taking care of the client. And I never liked that approach, like, because then I wasn't able to hold to my word or what we were going to do, or, and I didn't like not being able to support them in the way that, that I felt was right if I was a customer and how I'd want to be treated. So I used to, send some rants and stuff, and, being young and, making money and a hot shot, just not knowing the ways of the world the way you should. And she used to tell me, she's like, do me a favor, send me your email first before you blast it out to anyone else. But, really coach me on how to, control that and monitor that, and, take what's bothering you and put it in a manner that, people can digest, and actually you might get something that you want, versus like just saying, we're treating this customer like crap. Nobody's doing what we're supposed to do, like, so along those lines. So yeah, I can, I've just been very fortunate, and I'm humbled by the kind of people that I've been able to work with. It's definitely shaped and molded me. And I would tell anybody that, you need really, you're only as good as the people you're working with, and the people who can really teach you to take you to that next step. This journey needs great people along the way, and you have to kind of find yourself to align with those. Yeah, I think my mom was real strict. I grew up with a really strict mom. She was no nonsense, single mom. She just put heavy discipline on me, because she felt like that's how she was going to be able to make sure I was, become the man that I am. And so one of the things that she always taught was integrity, and that you have to be who you say you are, and you have to represent that in all levels. And that you're going to fall down and you're going to miss some days, but you have to make sure that you get up to be better every day. And so I've just kind of always kept that mentality that I just want to, every day that I get up, I want to be better, I want to get better, I want to learn something new, I want to figure out how to get better at this thing this thing we call life every day. So, and it's, I tell you, you get older.
You've been involved with 4 startups, but you've led 2. Talk to
Yep.
me about that journey from your first startup to where you are today.
Yeah, the first one, when you put that first dollar in, and then you're, going and you're raising money for it, and first people you talk to are the people right? So you talk to your friends and family, and you're convincing them of this idea. And back then I was so young, like I never really put the math to it, that if you really read how many businesses fail, it's kind of a crazy idea to even ask anybody for any money or anything like. But we just really believed in the idea. We really believed in the people that we were. It was, well, I wasn't alone. I mean, I had partners. I had, we had a great team around us, and it was being able to do that and go ask. But you really learn a lot when you look somebody in the eye and you take their money and you say, hey, I'm going to bring this back to you because I know this. Because when you're raising early, little stage money, you're not going to get that from guys that have money. You're going to get that from people who, like, they're pulling out of their 401k, they're pulling out of their savings accounts, because they want to take the chance that they can turn $25,000 into 200,000, where, a guy who has 10 million, he's just looking to make sure he gets a, 6% return. So it's it's a different conversation, but it's real when you look your family in the eye. And at one point, because we decided to have a startup right before 2008, and the world was going to end, which was a rough time, especially in the financial world. And we were hard headed enough to to continue. The board told us not to go any further. Go ahead, tell everybody. Nobody's ever seen what happened in 2008 in their lives. We were too stubborn and hard headed. We weren't going to do that, and so we went to raise even more money. And at one point, I had over 14 family members involved in the company, and our cap table was ridiculous. I mean, we could never do things, the lessons you learn, right? But they were there for us. And I used to say that we never said blessing on Saturday dinner. We always had we always had an update on the company. That was more important because they wanted to know where their money was.
You're doing quarterly reports. So I'm thinking of like the Bill Burr when he talks about Arnold Schwarzenegger being in the zone for 4 decades. Like, you've been in the zone for a while now. Talk to me about the evolution of your thinking and what maturity looks like after 20 years in fintech.
Yeah, it looks a lot different. I mean, it's funny. We joke around with people when I do my intros, especially in fintech. I'm the old guy now. No hair, gray hair, and fintech's still young when you go to these conferences and you're looking and you think back that you were that young guy, and being naive though was beneficial in some regards too, because not knowing what you don't know, and you go run through that wall and you take on those things. So I think when you're younger, you learn by, falling down all the time and skinning your knee and figuring out like, hey, I'm not going to do that. And then when you're a little older in the fintech game, you get a little more calculated and realize that, building a technical debt or, going too far past something before you really understand it or try to do it, actually cost you money and time. So, those lessons I think, are wise. You still have to have your craziness. You still have to have, that when you're talking to somebody about your idea and they're like, I don't understand, I don't get it, they're doing this, they're doing that, and then you learn how to, really hone your idea, because you have to get it to where, like, people think you're crazy enough for the idea, but yet they think it's a good idea. And then you just have to also realize some people aren't going to get your idea. And sometimes maybe that's what really is the magic, is that you're doing something so cutting edge, or you're doing something that other people don't do. Because especially if you're talking to people who aren't entrepreneurs or who aren't there, they really only understand the normal because that's what they're comfortable in. My co-founder now is a first-time co-founder, and the first day I told him, I said, there's a phrase you're going to have to get to learn. And it's like, you need to get really comfortable in the uncomfortable, because you just live day to day in that uncomfortable world. So,
So a journey from tactical to strategic.
yeah.
Give me an example. What did the early you believe that the current you now knows isn't true anymore?
What I know now is that, you can have the right idea and you can do everything right, and that doesn't mean that you're going to make it. And I used to think that if you just did it all right, and you put more effort than anybody, then it's going to work. And luckily I haven't been a part of that, but I've seen a number of friends that really put good ideas to paper, really did the right things. And you need some breaks, you need support. It takes a lot of people, entrepreneurs that don't have a big community around them, that don't have a lot of people to lean on, and whether it's from family, friends in the industry, family, your friends from high school, from wherever. It really takes a village to make this happen. It's it's like the same thing as people say, like when you're raising a child, right? It takes a village to raise a child. I mean, it's really what entrepreneurship is you're creating this baby. It can't walk, it can't live on its own, it can't feed itself, it can't do anything. And you're day to day trying to make it so it gets up and it starts to walk, and then it starts to dress itself, and it starts, and then maybe someday, down the road, you can take a vacation.
Yeah, let's play on this. It takes a village. Because you did say that founders often try to go at it alone. It does take the village of the network, the community, the family, the emotional load of being a founder, how support systems evolve across startups. Who showed up for you when you didn't expect it?
I actually I've had that from a number of people. So I've been real fortunate, but it's every once in a while where you wind up calling a friend, or you call somebody in the industry, and you're telling them, because you're gonna have those hard days. I mean, you're gonna have days where you're like, how crazy am I? I mean, why like, why is this not working, or why doesn't this work? And I would tell people, it really helps to end up talking to people sometimes you haven't talked to in a while, because sometimes when you're talking to the same people, they kind of already know the story, so you're not going back on the story. But when you talk to people you haven't talked to in a long time, you get to reiterate the story in a different way. You get to retell the story to them for the first time. And had a longtime friend of mine that I hadn't spoken to in a while when I was running, and he said, you have to have that same belief you've always had in your idea. What you have to make sure that you continue to do, is iterate and ideate off that idea, and make sure that you're honing your idea into the best you are, because your idea is no different than, a trained athlete, right? They're constantly in the gym, they're constantly working, they're constantly, honing their body, and that they can be the best physical specimen that they can, so that they can go in that. You constantly have to do that, every day. And it's that whole thing of like getting up and thinking like that. And my friend was just kind of reiterating that, like, make sure that you're not just building out parts of the business, you're also always tweaking and working on the idea to make it as sharp as it can be. So it's like, whether you're sharpening a stone, you're sharp, an athlete's getting better, you want to make sure that you go through those fundamentals. And that's the days where you're tired as hell, and you still got to get up at 5:30 and go to work, and make sure that happens, because it also does come down to who's going to work more in a lot of ways. It's no shortage of work.
What are those things that you do on a daily, weekly, monthly basis to keep everything sharp and tight? Like, what are your non-negotiables in terms of habits, routines, things like that?
Um, I'm not always as I'm very focused on the business. So I am, my wife would be very clear to tell you that I probably need to turn it off a little bit more. It becomes very difficult. So I don't know if that's where I'm best at. I am really good at focus. Like, I do focus on a number of things, like with the business. For me to turn it off, what I like to do is, I really do like, spending just, easy days with my wife, or, going to meet some friends. It's really like social, being around family, like just getting some social activities that that I don't have to talk about the business, or I, don't have to necessarily think about the business. And it's refreshing sometimes. You have to pop out of it every once in a while so that when you come back into it, it's not you can see clearer. So one thing I did learn as I got older is I do take a day here and there. I do take way more time, which is still no time really, but way more time than I ever did in the early days. And I kind of equate it to, I used to umpire like college baseball, and I went to professional umpiring school and stuff like that. And one of the things is when you're umpiring, they tell you not to get too close to the play, because if you're too close to the play, that's why when you see umpires, they can take a call from 10, 20 feet away. Is if you're too close to the play, it blows up on you. So they call it like that. And then it looks like, it all got there at the same time, because you can't track it right with your mind. And I think, entrepreneurs, that happens a lot because they don't step away, or they don't ask people enough questions to kind of take their mind in a different direction, and you can get going down rabbit holes. And so I think a good way to do that is just to take a break sometimes and come back and, train yourself not to think about it. Cause for me, it's hard. Like I have to really focus on turning my brain off from it from a little bit, so that when I come back to it, I can think about that idea that I was stuck on, or I can think about that thing that we weren't able to solve, and the ideas start flowing. Because a lot of times solving that's knowing how to ask the right questions to your peers or to your team. And when when it's blowing up on you, or you're too close to it, you can't see through it. It's kind of like when you editing a paper sometimes, and that error is still there, and you read it 10 times and yet you didn't pick it up. And then somebody else comes in here, is like, why is this here? Like, and you read it wrong. Sometimes it can blow up on you. So you got to kind of pull back so you can ask the questions and look at it the right way.
You've been involved in financial technology before it was fintech. I'm
Yeah.
interested in getting back to this. How has the industry evolved? Talk to me about sort of legacy infrastructure days, the rise of payment innovation, how behaviors have changed, and working with large banks versus community banks.
Yeah, I mean, like, in the early days, it was like it was called financial technology. It didn't have the cool fintech spin to it, cool name. And, really your goal is because there was, about five players out there, old companies, that have been around a long time, legacy software that, were gatekeepers. So it was hard to get integrations into them. It was hard. And so you could go sell to their banks, but then their banks couldn't integrate your system. And so, learning that, first of all, is like, we made like 20 sales right off the bat, but we couldn't make any money from those sales because we couldn't integrate it. And so then you had to talk to people about integration, and then they'd put fees on integration. So you had to get a group of people to go in and pay for the integrations. And so in the early days, it was really about financial technology was about, you know, being able to find your way into those integrations. Once you found those integrations, burr yourself in there, and sell your product into those bigger companies, and eventually they would have to either partner with you or buy you. And that was the model that you go for, or that so many were going for before. Like, you started branching out, and more corporates buy fintechs, and now fintechs become public companies like that. That was unheard of in those days. So that's really what's changed now is those same companies all have integration layers. If you start a company today, you can integrate the next day. You don't have to worry about that. You don't have those barriers to entry. You have different problems, and just as many in some levels, but you don't have the integration problems, which was one of the challenges. That was a real limitation toward revenue. And and I think the game's changed also too with the way you raise money now. They want you to have revenue a lot quicker than they used to. And so you have to focus and think differently than you did in the past.
What's the biggest misconception about how money actually moves?
Yeah, that's a huge misconception. People don't really have enough respect for what ledgers are, and that, the money actually sits there the whole time, and it just gets ledgered from Steve to Dan, and from, bank A to bank B. The Fed system's a great example of, the money really not moving except on the ledger. And so I think, in America, we hear like, it's $1 trillion, and we think like it's a new trillion. When you talk to people, they don't realize that $1 trillion was, one of those dollars was 30 times of that. It was going around, and went to you, it went to me, it went to, so we're really good at We've really built an incredible system of, how that we all get value from, $1 makes, 10 people, money, and how that works. And the ledger system in America and how we're doing that just gets more and more complex. It's going to get even more complex with, crypto and crypto conversions, as we're going to be taking on kind of like FX kind of principles here, where, like in Europe, they're always dealing with currency conversion and everything along those lines. And, one of the things that's going to be interesting about our system with crypto is how are we going to convert that new currency into our system? And, what is it going to adapt to? What is it going to relate to with USDT, or, it just down to the dollar?
Give me the real founding story on Next Moves, not the pitch deck. Give me the truth, leaving your last startup, meeting your co-founder. What problem in the market could you not ignore? The scrappy phase, the first big validation moment.
Yeah, I think, well, we were actually friends for 20 years. And our last company, Move, was the first time we actually worked on the same team together. But I had worked at 3 companies where my company and his company were partners. And so we were the partnership guys on some of those levels. And so we had always got to work and we had formed this partnership, but we had never worked together. And then when we were at Move, we were working on deals together, and it was just, you know, ham and egg. I mean, it was just really good. I mean, he's really good at the technical and solution part of that, and I'm always thinking of crazy ideas, and he's figuring out how to make them happen. We just really built some. We're really a good yin and yang, and to make it work. And then one of the things that, we really learned when, as Move went on, was that there's all these mid to small companies that are really looking for help. And then there's these banks that are looking for help. And it just seemed like there was this gap in the marketplace for who could really do that. I think, Move had intentions of that, but it was, developer heavy, and developers got really expensive during COVID, and not everybody can have, that many developers on their staff. So people needed more, out of the box solutions. They needed a little bit more help. And then as we got deeper into it with issuing, one of the things we really learned is that they actually needed real handholding on building up a program from the ground up. So like, when you see these credit card programs that are out there, there's a tremendous amount of work that goes involved to create the risk factors, to create, what's going to happen if the person doesn't pay this, or, what's going to happen if that reward doesn't go through, and, to build all that out. And, people think that banks know payments, and that's a misconception. Banks in America weren't traditionally payment banks. There's only about 150 payment banks in the US. So out of now 5,000, 7,000, something like that. So you had this bank that didn't know how to do payments, but you got to use a bank to do payments. And then you had all these payments people who know payments inside and out, which is very complicated, but they don't know banking. And so they don't think of the risk and some of the compliance things that go involved. And so we actually, because of my first startup, learned a lot about banking. And then because of the other companies I was with, learned a ton about payments. And so we kind of sit in the middle as this like whisperer between like, payment people, fintechs and stuff along those lines, and then banks to help them, find solutions.
So beyond that, what does Next Moves actually do, and why does it matter?
We left Move, and so both, my partner and I were from Move, and then we were sitting around, and we're like, sitting there going, what are we gonna do? Like, what's our next move? Like, what are we gonna do now? Now we're not at Move. Like, how are we gonna do this? And he's like, that's it. He's like, Next Moves. And then he's like, everybody knows we come from Move, so it'll be a little bit of a double entendre. So that's really the gist of what it was. And then we started out as like an advisory firm for payments, just until we figured out exactly what we wanted to do and what we wanted to build. So we looked at the chess pieces, and our symbol is a rook. And so, we couldn't, the 2 queens didn't have a good ring to it. So, we went to the next powerful piece on the board, and we went to the rook, and it really took off. So we think there's a couple of approaches that we're going after. One of the ways is you need to build a card that's competitive on the interest rates, of course. But really, one of the things that we're really changing on is experiential rewards versus just traditional awards where you get points. And back in the day, right, you used to get points for Delta or different, and but they can adjust the points. So it's used to be, 100,000 you could get here, and now you can't get anywhere, right? You need 300,000. So what's interesting about the younger generation is that they came from, if they were told something, they were able to get it. And they were, when I was a kid, my mom was like, well, too bad. Sorry, it didn't work out. You don't get it. That's how it goes. You know what I mean? Don't cry to me. That's life, right? And this is a generation that, if they were told something, they fundamentally got something or they got something to replace it. And so because of that, they build these values around, like, if I'm going to go spend on your card and I'm going to spend $5,000 or $10,000, then I want to know that I get A, B, or C for doing that, for doing what I said I was going to do. Now you need to do what you said you were going to do, and you don't get to adjust that at the end. And so we've been building reward programs that are built more for, like, all right, I get to put my name in a lottery to get my own private concert from my favorite musician, or I get to take a trip to New York that I never got to do, and you get to do it in a way that you didn't ever think you could do, right? So building these like experiential rewards, or you get to go to Machu Picchu and you never been there, or like, so that's it doesn't all have to be around concert or travel, but those are some of the more popular ones because of people. But being able to, even if it's an item, something that's special to them, not something that they could just go buy. Because, we also live in a time now where if people want something, they get it a lot more than they used to. It didn't used to be like, well, make sure you have this much money in your savings and then you can go get that. We kind of live in a world where I really want that, I go get it, so you have to build something that is outside of those, parameters. And I think one of the things that we do well is we keep adjusting to the marketplace. We're doing a bunch of surveys. We're doing an incredible thing with the University of Georgia master's program, their Fintech program, and they're doing some great consulting analysis work for us on some of this. And I think we just always want to get educational there. And then as far as there's some partners that we have that help, can adjust. Like if, say, you go into your Amazon account, you can take our card and move it right to the top so that it's very simple. You just have to log in. It goes in there right away. So then that's one of the things. But the other thing is making sure that it's really, the most important thing is that this younger generation doesn't have the relationship to banks like we grew up. They don't have that relationship. What they have relationship with is their companies that they do business with, the companies that they wear, and they want to give back. They want to get from the companies that they're with. So you're going to see a lot more cards centered around companies that, whether it's the UFC or whether it's, different things along those lines, like things they like to watch, things they like to do. They're going to want those levels of engagement from those cards because then they'll give them rewards toward those opportunities that they're interested in.
It's a wonderful generation, and I'm glad that you're helping them participate in rewards, is what I'm hearing.
Yeah, I like the younger generation. A lot of people, talk about them, they don't do this or they don't do that, but they're also extremely educated, like compared to my generation. I
Yeah.
mean, we were real dummies comparatively to what these kids know at 10 years old. I mean, it's unbelievable because of technology, and you can't treat them like we were treated. I mean, it's a different level, and you just have to appreciate that there's so much different.
Yeah, every generation has a problem with the generation behind them. But as we're moving into this next generation of AI, crypto, what's actually real about AI and payments beyond the hype? What do you have to say about AI and in the payment world?
I mean, we've seen some really good things with AI for processes and efficiency. I mean, that's for sure, and I think everybody kind of gets that. I think understanding how it will change consumer buying behavior, I think, is the biggest thing that I really, are interested to see how that goes. And there's a lot of new technology coming out over the next 12 months that's going to have, with not just bots like on looking at that, but like how it really relates to, okay, the AI sees it and then you are actually making that purchase and how that goes down. And then, some of this new uh, technology that they're coming up with where you're going to be looking at a video and everything you see in the video, if you like any of that, like if you see a lamp or you see a chair that you like, you click on it and then you can buy it right there. I mean, there's some cool stuff coming our way that, will be interesting. But, for us, we're all about the spending and the, how that works. And I think, we're really keeping an eye on who we want to partner with that's going to be able to make it easier and better for how people spend on the cards, and how they want to use that, and how it aligns with the spending of, is it going to change or do anything toward, stable coin values and crypto to make it easier to understand for the consumer market. Because I think a lot of people still forget that, even people who are spending crypto may not understand exactly the mechanisms of how that works.
Okay, I'm going to shift gears here. It's been a interesting year for everybody. I talked to a lot of different people between the tariffs at the beginning of the year, the effect on the stock market, the government shutdown, real estate's stagnant with interest rates. When you think about this year personally, professionally, what have you learned about yourself?
Yeah, I've personally had a lot of friends that have gotten sick with, serious illnesses, and the business was hard because there's a lot of unknowns, like we're in the banking space, like, so banks don't like risk at all. Their business is risk, but their main job is to mitigate that risk as much as possible. And the one thing about, in the world we're in with our president, it's, there's a lot of unknowns with the tariffs and where the economy is. And that keeps a lot of people unbalanced, which makes it really difficult in our business side. And then on the personal side, just, lost a friend of 38 years, and, really makes you think and look back of, did I spend enough time? Did I call him enough? Did I do those kind of things? So I think that I really learned the value of long time friendships, and why it matters, and why you have to make sure that the people that you do spend time with, even if you don't spend time with them all the time, that they matter to you and that you care about them. Because just, and this 50, being in your 50s makes you realize, like, it's around the corner. It's not as far away as it used to be. If somebody tells you that at 25, you're like, whatever, man, you're old.
You're holding up pretty strong.
Yeah, yeah, yeah. I'm trying. I don't want to get. You really reflect a lot when you with death, and I think it makes you really realize, like, are you going to get better, or are you going to get worse in some areas? And I've done a little bit of both, right? I haven't worked out the way I wanted to, but I've done, some mental exercises, and achieved some things on that side, and built some strength around things that I used to be more sensitive of, that I shouldn't have been, and built things, worked on myself on other areas that, that were troublesome for me in the past, or, weaknesses, right? We like to.
I appreciate you getting real with me here. Steve, I really appreciate you joining me today. This has been an awesome conversation. Your journey, I feel like you just embody the integrity that you talk about. I can feel your energy from the other side of this conversation, so I know why everybody likes you. And you're a reminder of what real entrepreneurship looks like: resilience, community, and a willingness to reinvent yourself. Steve, this has been awesome. If you guys want to learn more about Steve or next moves, please check out the links in the description. Steve, from the bottom of my heart, thanks for getting real with me today. This was a great conversation.